What I want to discuss today is the currency fluctuations. Here is a chart over the last year for GBP to AED. You can see when was a good time to invest, so when you were getting more dirhams for your pounds. Here's a statistic for you, for all British investors. If you had purchased a 2 million dirham property here in the UAE, it would have cost you around £440,000. Similarly, the Japanese yen is falling. We've also seen that against the US dollar. Hello and welcome back to another episode of What's the Deal? My name is Jack from Edwards & Towers, and today I'm going to be discussing with you all the importance of currency when purchasing property here in the UAE. We have just witnessed the elections in the United Kingdom, where the Labour Party have taken a landslide victory, taking the majority of seats in the House of Commons. That in turn has spiked the value of the British pound. We are yet to hear about the election in the United States, although it's a very exciting story indeed so far. What I want to discuss today is the currency fluctuations. Here's a statistic for you, for all British investors. If you had purchased a 2 million dirham property here in the UAE on the 20th of April this year, 2024, it would have cost you around £440,000. We are sat today on the 24th of July, 2024, so only a couple of months after, and that 2 million dirham property would only have cost you £418,000. That's a pretty decent saving. It's around 5% saving in total, just on the currency play of you waiting to see what happens in the future with the elections. A £20,000 saving or 5% can also therefore be added to the property in terms of when you exit that asset. You've got to time it right. Elections typically internationally always spike currencies for or against. For example, if you were a Russian investor back in 2022, the ruble value was around 0.62 to the dirham. So you were getting 0.62 dirhams to the ruble. Right now today, that value has dropped to around 0.4. So you've effectively lost 30% of the currency value. I've spoken about it before in some of my other videos and episodes where I have discussed what's going to happen in 2026 and 2027. A lot of these Russian investors that piled into the market in 2022 are now facing payment plans where effectively the property price has increased because of the currency play by 30%. Now you tell me, the properties that were purchased in 2022, most of them were secured on payment plans where they were either 50 or 60% during construction for an off-plan property and then 40% on handover. With the currency play, and if you're moving money internationally from, let's say, Russia, that property, therefore, or the final installment has become 30% more expensive. When you exit that property, if you sell it, it would not make any sense. However, some people might see it as an opportunity just to get out and cut their losses. Currency fluctuations are an externality that you can observe as a property investor and take advantage of. Equally, they can work on the other way. We may see that when some of these properties start to hand over in 2026, 27 and onwards for Russian investors, mainly because of the ruble devaluation. Similarly, the Japanese yen is falling. We've also seen that against the US dollar in particular fall to around 25% in most recent times. And what does that mean for property investors? For example, if you were a Japanese investor back in 2021, when the yen against the dollar was still relatively strong, and you purchased back in 2021, you would have already been through that aggressive property boom that we've seen, where you would have made 30, 40, 50% capital appreciation on your assets. However, your currency has dropped 25% in value, therefore eating away any of your profits that you would have made. This can be really frustrating to navigate, and not many people have that crystal ball to look into the future for the currency and see when exactly is the right time. We can only pinpoint moments where it looks better to invest now than what it did previously. Right now, if you're a British investor looking at buying property in Dubai and moving your cash from the UK to the UAE, there has not been a better time since 2021. Typically, if you're aiming at a GBP to dirham rate of £1 to 5 dirhams, that is extremely good value. When that currency then changes and you exit that property investment or a flip, you will not only make money on the capital appreciation of the property, but you'll also be making money on your currency play. This is really, really important to understand and something to consider. I urge you all to do this exercise yourselves and look at the currency play and the fluctuations, especially as a British investor at the moment over the last 12 months. Here is a chart over the last year for GBP to AED. You can clearly see there's some pretty decent fluctuations that you can take advantage of. I'm highlighting with you the stat that I said before around the 20th of April, where the dirham to pound exchange rate is around 4.54. It even spiked last week to around 4.78. Okay, so you're gaining around a 5% or maybe more. If you maybe looked at October 2023 and this lull here to last week, you could actually make some decent income from just moving currency. Over a 5-year view, however, so let's say you were looking at buying a property off plan today that is ready in 3 or 4 years, you can also monitor the currency fluctuations over a 5-year period on these charts. You can see when was a good time to invest, so when you were getting more dirhams for your pounds, and when it was a good time to potentially not invest. So, if you're a British investor looking at capitalizing on the currency play at the moment by moving GBP into AED to facilitate a property purchase here in Dubai, please get in touch with me on the details below and make sure you book a call with us together soon. Thanks very much for watching, and I'll see you again on another episode of What's the Deal?